Hi, this is Yahoo. I'm Mark Option Trading. Today is September 13, 2025, 9:23 a.m. Japan time. I'd like to start with a quick market review and then move to the something that catch my attention, the subprime auto loan issue in the US. From there, I use that lens to think about the bigger shift happening in the global economy. Okay, market review. The Nikkei closed yesterday at 4476 AM, and during the SQ session, it even touched 45000. The market is showing strong momentum. Volatility is sitting in the 24 range, so not much fear in the market. The BS has recovered to about 2470 yen, and the APL is at 18.10 times. The DBS recovery is helping push the Nikkei higher. The US market is also strong. The S&P closed at 6584 points, and gold is trading around $3643. Although risk asset remained firm, and with late cat still on the horizon, the outlook remains positive. Okay, next, subprime outrons. Now, let's shift to gears. And recent trade news came out about the subprime outrun program in the U.S. A lender went bankrupt. People are starting to ask if this could spread into the financial system. The size of program is said to be around 8 to 10 trillion. For comparison, the subprime mortgage crisis back in 2008 was closer to 100 trillion yen. So in scale, this is about one tenth, and that's probably why markets aren't reacting much. But the real story here is not just the loans. It's about the end of the low interest era. For years, business were built on the assumption of cheap money. The assumption is breaking down. 10 shift assumptions. I see about the 10 big assumptions that supported the post-war global economy, and all of them are now shifting. Okay, first one, post-war mindset and a pro-war mindset. And the world after 1945 was called post-war, but with Russian invasion of Ukraine, some says that we're already in pro-war era. Okay, second, international cooperation, broad economic. And globalization and free trade were the norm, and now tariff and economic bloc are taking over. Sorry, low interest rate, high interest rate, cheap money is gone. Even in Japan, cost push inflation, rising rates, okay, for resource service. Resource shortage and EVs once used excess electricity. Now AI is eating up power capacity. Nuclear power and new capacity are back on the agenda. 5. Global warming, boiling planet. The summer was not just hot, it felt like boiling. Agriculture and insurance markets will feel disturbed. Checks. Immigration push and immigration restrictions. From open doors to tighten immigration borders, Japan is seeing more Japan flights domestic. Um, Sanseto, yeah. 7. Mass hiring and disrupts replacement. Hiring was the growth model. Now AI is replacing workers. The shift is towards self-employment and creative economies. Okay, 8. Low tariff, high tariff. free trades giving away to tariff wars. Trump tariff is this is two. Okay. 9. Web search and AI search. Traditional search engines and engines are losing ground, and media models are based on clicks and um, grasping. Yeah, AI search is now so okay. Tends and adult driving a scale on a subscription volume. Okay, scaling is ad spending is breaking down. The new model is direct value and paid subscription. Okay, this is a 10 shift. Is very important. Wrap up. So the old Trump problem may be about 10 trillion yen, but if each of these 10 shifting assumptions carries a 10 trillion yen shock, um, the co- the total could easily reach 100 trillion yen shock on the scale of 2008. On the surface, markets still look strong, but underneath, the ground is shifting. That's something we should all keep in mind. Alright, that's it for today. If you like my content, think of it's going wrong, put action. Follow me for more insight. See you tomorrow.